2026 early summer market update webinar. My name is Andy Campbell, and I'm going to be walking you through where we see the equipment categories going from a risk perspective, from a valuation perspective, all for our lending partners that are out there. Let's begin. I'm going to try to get this done in about 30 to 35 minutes, be succinct. If you have any questions, we'll have a couple ways that you can get more information from either myself or from TractorZoom. Let's begin. Maybe. There we go. Okay, at a high level overview, these are the categories that I'm going to be covering. Row crop tractors, combines, self-propelled sprayers. We'll do a little bit of forage equipment. We're also going to be looking at four-wheel drive tractors, utility tractors, the harvest headers, grain carts, especially as we go into this big sales season of the summer, and then finally wrap up with planters that just went through their sales season. I mentioned there's ways that you can get in contact with us. If you're not already subscribed to our LinkedIn channel, you're definitely going to want to do that. Our marketing team puts out a great deal of content at a regular basis. This is just a very good way, if you're on LinkedIn already, just to get snapshots of the data as it happens in real time. I'll have this QR code up again later. Okay, we just held a webinar for our equipment dealers and asked them the question of when do they believe the bottom of the market is. This is their general response. This is incredibly insightful when I pair it up with, and I'm going to flip back to this in a moment, the fact that I asked them this exact same question on the same day the year prior. About a quarter of the people believe that it was either now or had been. A good portion of the deal, at least above 50%, believe it's coming at the end of the year or the next year. So when I asked them just the other day in 2026, the same proportion really answered in the same way, just for this current year. And what that tells you, at least what it tells me, is yes, there's a portion that doesn't know, that's just gathering information, but they're optimistic. They know that it's not going to, most of them know that it's not going to be right now. And a lot of them know that it's going to be at least 5 to potentially 12, 18 more months that we're going to be working through some of these challenges in the ag economy. So I would say it's a good indication that there is no crystal ball. Nobody knows exactly what's going to happen. But they also know that we're not in the bottom right now, that it is going to be a little more prolonged. Okay, moving on. If you're not familiar with what TractorZoom is, at a very high level overview on the left-hand side, TractorZoom Marketplace at tractorzoom.com, where farmers can find the equipment that they need. It's a great way for you to work with your farmers out there if they're looking to see what their piece of equipment might be worth, find some other comparables, some lists that are out there, but also, more importantly, find the equipment that hits and fits their operation. The TractorZoom Pro, hopefully a lot of you are already familiar with, the valuation software that our lenders use to apply valuation on the equipment, run their equipment lists so they can keep their farmers' fleet above water. And then our dealers use this as well as the Amble Pro situation, which is primarily for our dealers on the right-hand side. Okay, large macroeconomic factors. Net farm income, you can see net farm income, the darker bar, that is coming from operational cash down. The growing slice of that pie, this light green, direct government payments, a growing substantial portion of farmer payments. And we're sitting today at June 25th. President Trump just announced this morning that he's going to propose an $11 billion increase on top of what's already projected this year. We'll see if that actually goes through, but that would be on top of this already really large amount of direct government payments. Other aspects that are happening in the macro side, Farm Bill 2.0 was and likely will pass the House, get signed by the president relatively soon. The effect on the equipment industry will provide a little more consistency rather than a boost. But consistency is good. It's something that the farm economy has been lacking here as of late. It did not have any mandate for E15 or in the bill itself any assistant payments. Like I said, that might come from outside. But like I said, not a boost in farm equipment money, which is maybe fine because that keeps things a little more consistent going forward. Canada makes a big difference because through the border, we will share equipment fairly readily. A couple issues going on with Canada: record stock levels of peas and lentils, major crop for them, and so that overstock is hurting their markets there. They've had trade disruptions with China and India, some of their major trading partners. That has been a drag on the ag economy. Bigger than that, though, is us here in the United States having 60% of their ag exports, and having the tariffs applied to those has significantly hurt the ag economy. On the positive side, their cattle herd is actually increasing year over year, which we are not here in the United States and probably won't be. And that is at least one bright spot that they have north of the border. No surprise to anybody watching this webinar, crop inputs are rising. That will have price pressures on equipment and should help keep some equipment a little bit more affordable because there's only so many dollars to go around. One thing, and again, most people watching this webinar probably are not unaware of this, but new equipment prices, or like new equipment prices, continue to rise year over year. This just happens to be the average cost of a grain cart, and so you can see the yellow bar continually rise year over year, whereas the blue bar, which is the auction value, average auction value of these grain carts, stays steady, if not decreases a little bit as the farm economy comes under pressure. That gap challenges people to go buy new or like new at dealerships, and that has some implications for slowing down equipment purchases. So as I go through the conversation today, this is going to be a growing trend that you see is there is actually some strength in values that we're seeing on the retail side, somewhat on the auction side, but the volume is certainly not there, not to where it was last year. And we just saw that if you follow the AEM, American Association of Equipment Manufacturers, their new sales of tractors and combines, both for the latest month released in May, were down significantly, and we're seeing similar volume decreases on the used side. Last thing, and there's a lot of data within this chart, but I'm just going to summarize it very briefly. This is out by the University of Minnesota. That while things are challenging across the country, we are obviously seeing a little bit more on the liquidation auctions that are out there, which is kind of a proxy for farmer stress and farmer bankruptcy. It is ever so slight, and for the majority of farmers, they're far from hitting insolvency. And so we'd have to really see a fairly significant reduction in equity values for that to happen, even though liquidity is strained. And last, on the macro environment, you'll get a copy of this, and you can obviously, since you're getting this on demand, you can screenshot it and pause it right now. This is from Meridian Ag Advisors. Their team over there provides us with some fantastic ag resources and macroeconomic data. If you don't already follow them, meridianagadvisors.com is a great source to go to, and I believe they have a strong newsletter you can sign up for as well. But this does put a very good snapshot on the ag economy today. Okay, one of the things that I follow is the industry inventory health as a whole. When that gets unhealthy, and I'll show you what that looks like in a minute, that can really drag down values fairly quickly. The reason why that happens is when, let's say, inventory becomes bloated, it's costly to carry. Dealerships have to liquidate. When they liquidate in mass, then those auction values take out the premium buyers and continue to drop relatively rapidly. And anybody that then needs to liquidate their equipment is caught in a very steep down market. And so that's when we can start to see valuations change. That's what I'm looking at when I look at inventory health. Right now, this is a histogram of all of our dealer groups across the country and how much inventory they're carrying per location. It's a great proxy to kind of normalize one dealership to the next. The yellow, if you call that color, that was the inventory position this time last year. The further to the right you get, you just have certain dealership groups carrying more inventory per location. So that bubble that you see all the way off to the right with the little bar over it, that's a little troublesome. What has happened over the year, and the gray represents this current year, that far right bubble on the x-axis, that is shifted far to the left. That's fantastic. And then furthest to the left in that essentially less than $1 million of inventory per location, that has grown by over 40 dealer groups. Again, that's healthier. They're carrying less, they're leaner, and they're able to survive a down market a little bit better, and there's less pressure for them to liquidate. That gives stability to the market. That's, and takeaway, that's good. Okay, one other question that I had when we had our dealer webinar just the other day: which equipment categories do our attendees in that webinar, worry about the most? And so they're able to pick 3 out of all the attendees. I believe I had maybe 55 total that answered this question. And so we have combines coming in at the top, and then we've got four-wheel drive, high horsepower tractors, followed by sprayers. And I would concur with the combines a little bit. You'll see that there is probably some strength in the combines that I see in the data that maybe they don't. But then the high horsepower tractors are a category that I worry about the most. We'll go into a little bit more depth on them. Sprayers and planters, somewhat. And while utility tractors are far down for them, I do think that category is a cause for concern. But from the risk that it carries, both in probably your portfolios and in theirs being a lower cost item, probably less reason for risk. Okay, we're going to start with grain carts. I did an analysis on grain carts recently and published it in the farmequipment.com magazine. If you get that magazine, I believe it's also online that you can access for free. You can see the perspective that we saw when looking into the data and really the elasticity that we're noticing with certain implements right now, grain carts being one of them. So I'm going to walk you through the story really briefly. Grain cart supply started to creep up here recently, which is an anomaly. We're seeing a supply of almost all used equipment drop. That brought our attention to it. You can see that in the graph right there. And one of the other pieces that we dug into was the average values year over year. This is just 900 to 1100 bushel grain carts, steadily dropping as the farm equipment economy cools until 2026. Now, for whatever reason, I don't entirely know why it made that significant jump, but it did. And when you have a down farm economy and you have a price increase like that, it's no surprise that grain carts stick around for longer. And this is the average days listed on dealership lots. It's a metric that we track, especially for our dealers. And it's a worrisome trend. Now, why is all this happening? And we surmise that carts are probably a little more price elastic than other pieces of equipment that aren't yet following this trend. So making these buyers more price sensitive. The reason being, when you look at price elasticity from Econ 101, they're durable. If they break, they're easier to fix. There's less technology on them. They could have potentially bought them 2 to 3 years ago when times were really good, or when they upgraded to combine, or they might be deciding to delay the purchase next year, couple of years. They make whatever they have last. And also with grain carts, brand switching is relatively easy. It's easier than a tractor with tech embedded in it. And that could potentially be a reason why these are becoming more elastic, more price sensitive. Where else is this happening? So once we realized that this was happening, we started to look at other categories that may be similar, that have similar characteristics. High-speed discs was certainly one of those. The days advertised was growing even faster than grain carts. We did also ask our AI engine that sits on top of our data what other categories have a lot of these same characteristics. And oddly enough, smaller row crop tractors came up near the top. So we're going to hit on that when we get to row crop tractors a little bit later. But that is one thing that you might want to start observing with your farmers. I know there's not as much touch points over the summer as there are once you get to loan renewal season closer to the fall. But be having those conversations, because we're seeing it within the data that they are becoming a little more price sensitive to purchases that even if they need it for their operation, they seem to be holding off. Okay, we're going to go through combines, tractors, sprayers, planters, a little bit of forage equipment. So let's get started here with combines. Starting with the Class 8 combines, the majority of the combines out there, both in terms of number and value. I will say Class 7s, we did an analysis on them as well. they follow Class 8s very similarly, so we just focused on Class 8s in this presentation. 16% reduction in value. We're actually 37% off the high from August of 24. It is a good, healthy decrease in the overall inventory, but you can see that we're relatively steady here for almost 2 years. That adds stability and reduces variability within the market. All good things. I think we're in for a softer landing. Here's valuations for Class 8s over the last 2 years. And while you have some seasonality bumps in there, and this last quarter, a bit of a drop in auction values, auction being the blue line at the bottom, retail list at green at the top, and then actual dealer sold values in the dotted orange line, slightly below that. All of them are trending to the right. There is some seasonality with it and a recent drop here in this last quarter. But I've got reason to believe, and I'll show you that in a moment, that Class 8 combines are steady, and we actually had some pretty strong sales here most recently that could bolster the market this summer. Now, I will say, if you're not familiar with some of the charts that I do, you've got our filters down in the bottom, usually in a box. I've got years and hours here. These are relatively low hours. So when you're looking at your farmer's equipment, is it sitting late model, low hour? Tends to be a little bit more volatile with price action. You lose some of that volatility as machines age. They essentially become what the equipment is worth or the job that it does. And so up slightly year over year in terms of overall auction values. I think that's because people are looking at auctions instead of dealerships for some better deals as their liquidity is under a little bit more pressure. But this is for, was it 1,500 to 3,500 hours there. This was the point that I was telling you that gives me a little assurance that the Class 8 combine market is doing strong. John Deere S780s dominate the Class 8 market. And that orange line, this is a depreciation curve that we see for all of the sales that have sold at dealerships, actual sale values. And the trend line in the past, they've been fairly tight year over year. The orange is the last 30 days. In the last 30 days, we've had some really good S780 sales. Some strong responses in the market. There's not a lot of sales, like I mentioned earlier, going on from a volume standpoint, but the few sales we are seeing are strong. It also helps that the dealers have much lower inventory, and so they're not incentivized just to push things off their lot like they were maybe 2 years ago. And we're also seeing this with a very comparable Case IH 8250. Less of these, obviously, in the market than there are the S780s, but a very comparable machine. Strong auction or strong dealer sold values as well. Okay, moving on to the larger combines, Class 9s, 10s. There's a lot of questions on these in the market as those combines become available for a second user. Is there a second buyer for some of these combines? Overall, the supply hasn't dropped nearly as much as what we've seen in other categories. That's a concerning bit for these larger combines. From a valuation standpoint, there's not as many of these, so I'm not going to go quarter by quarter on these averages. Sometimes you just don't have data points of sales that happen in every particular quarter. Case in point, so far in 2026, for this hour range, relatively low hours, I only have 5 auction comparable sales. So that number is a little bit lower, but again, there's only 5, so your variability and statistical significance is certainly lower. What is significant is 36 dealer sales that have happened, and we're seeing those increase. So again, it fits the theme. Less sales are happening, but they are strong sales. Wrapping up combines, Class 8s, softer landing. There's some support that we're seeing going into summer for valuations. Class 9s, still big question mark on if there is a second buyer. They're trying to find their footing. Headers, real quick because it is the season. Not a lot of a story here. Supply has reduced 20% for platform. These are your draper headers that are out there. Row crop headers, volume is reduced even more, 30%, which is good for stability and valuation. One big challenge and reason why I'm watching this market, the folding header market is dropping, and the resale values are a little harder. Now, whether that is because there's just more moving parts, not entirely sure, but we're just seeing average values drop year over year for some of the major brands on these. Now, there's a lot of variability when you look at folding corn heads in general, with what they can offer in terms of attachments. But looking at 4 of the top models, seeing a fairly consistent trend on the retail resale value. Okay, now we're on to tractors, starting with 100 to 175 horsepower, what I would consider a utility tractor. This market has been relatively strong the last couple of years because the multiple buyers, good diversity in who they sell to, cattle market especially. They continue to drop in inventory. That's good, 30% drop in inventory. But one of the challenges that this market faces is actually not presenting itself yet. Like I said, the volume has been fairly steady in terms of inventory. This chart here looks at the age of equipment sitting on a dealer lot, and it's really that bottom gray graph that represents that aged inventory that's sitting on a dealer lot for over a year. Dealers don't like that down there. It's very expensive to carry equipment longer than a year, and if it doesn't sell in a year, it's probably not going to sell in total. So they try to get rid of it before then. This selected area from green down to maroon here represents 90 days to 270 days. That is going to become aged relatively quickly. Dealers are going to have to deal with that if they don't sell through this in the summer. With the farm economy looking as it is, they might not sell through it in the summer, and that will present a problem. So I think there is a little bit of risk coming up with utility tractors. One other important thing to note with utility tractors is that the cattle market has helped prop this up. Now, cattle producers, unless they're a cow-calf operation, are having a challenge because they're having to invest a lot to buy feeder cattle. They have to either invest a large amount of money now to buy feeder cattle or choose to buy a tractor. They don't have endless supplies of capital, as you guys very well know, and so they have to make choices. If they don't buy utility tractors, that could, again, challenge this market. But currently, the light green graph by different hour marks is the auction market for utility tractors. The dark green is the same hour markers for this time last year. We are well ahead of where we were last year in terms of overall auction values. It helps not inundating the market with tractors. I wouldn't worry so much about the disparity on the far left between the tall green and the shorter, darker green. There's just been some phenomenal pieces of equipment that sold very, very low hour that inflate that average. And just looking at a few comparable sales within our TractorZoom Pro database of auction sales and dealer retail sales. When I look at these, John Deere 6155 is one of the more popular models out there. Last year was retailing for $179, and now you're retailing for about a $169. So you can see a little bit of the decrease already happening, but this is the last gen tractor. Dealers are trying to move these out for their new 6Rs that are coming on. To put a wrap on utility tractors, concerning, there's amount of aged inventory that may hit the lot. These aren't the biggest value piece of equipment out there, so from your standpoint, they might not be overly concerning, but one to watch. Now moving on to the row crop tractor market. Like I said, smaller row crop tractors popped up as a potential concern due to the question that we asked our AI, and I'm seeing a little bit of it in the data. 26% volume drop year over year. That's positive. We're seeing a little bit of a decrease in auction from really 24 into 25. Since 25 was some seasonality, it's risen and it's back down to where it was this time last year. Not too concerned about that. We're seeing a little bit of differences within different models and regionality, but sideway movement there with the row crop tractor market in the low hour stuff. Once you get into the higher hour items, that is a sweet spot within both the smaller row crop and the larger row crop. Auction values are up year over year. Dealer list and dealer actual sold values are up slightly year over year. And one of the big reasons why older tractors are doing better than, call it the younger, the lower hour tractors. Lower hour tractors, I think, are at a price point now where it's price sensitive, getting back to the elasticity chat that we had. Typically, the top bar graph that you see, 38% of these tractors less than 2,000 hours will sell within the first 60 days off a dealer lot. Most recently, that in the past year, 2026 year to date, they've only been moving at a 25% rate in the first 60 days. That slower sales velocity has some negative effects on valuation, whether it's pushing it to auction or reduced price. So an area that we're watching there and cause for concern. When we're looking at the higher houred, smaller row crop tractors, I don't even have those in there. I can just tell you it moves at about a 50% rate, where 50% will sell in the first 60 days traditionally, and we're at 46% are selling in the first 60 days. So right on pace pretty much with where we typically are. Larger row crop tractors, at a high level summary, sales are relatively strong, especially as you get up there in hours. Volume has not dropped nearly as much. There's less incentive for, I shouldn't say incentive, there's not as strong of an appetite to reduce supply willy-nilly for these large tractors. They're high value. Dealers have a lot invested in them. They tend to be a large part of their top line revenue. But supply has dropped slightly, 16% year over year. From a valuation standpoint, relatively flat, moving sideways when you look at the overall average. This is for the low hour tractors. A little bit of a dip in auction here in the spring, but like I said, you see that dotted line on the far right of actual sold values continuing to climb. Not a lot of values, not a lot of sales, but the value is going up. 7.5% year over year. That's flushed out when I look at one of the more prolific tractors out there, 8R 370s. Better than 24, better than 25. We're certainly not back to like 23 type of values though. And again, in farmequipment.com, I'll do a monthly analysis. This was one I did a few months ago, just highlighting the velocity that sells at the different hour marks. And you can see that 3,000 to almost 5,000 hour mark. Tractors essentially fly off the shelves when they're in that mark. The low hour mark, the 100 to 1,500, those are obviously more expensive. People are a little more price sensitive to that, and that's really slowed the velocity down. That velocity typically sits around 24%. Will fly off in that month when you combine the high horsepower and the low horsepower together. But in summary, in that large row crop tractor, it is stabilized. It's not a category that I'm too concerned about. Aged inventory continues to decrease. Sales, trades are evident. It's just slower. Okay, high horsepower tractors. If I'm worried about anything from a risk perspective at a lending organization right now, it's these. The supply has not dropped at a meaningful level, and these are very expensive machines. We're seeing this aged category. If you remember how I defined this chart, I'm going to leave it up there for a second, or you can just simply pause the video. This is your plus 360-day category, that dark line graph bars at the bottom. Off to the right-hand side is the sales rate and the proportion of those different age categories and what's selling. Just a few times, just a few months have we been able to sell more aged than what we currently have in inventory. What that means is we're barely making a dent at times, sometimes not, in the amount of aged inventory that's out there. When these pile up, it's a financial cost to the dealership because of their interest and carrying costs. When there's too much of that pressure, then they liquidate. When liquidation happens, there's downward pressure on overall values. And we can see that when we look quarter to quarter in the overall values, roughly 10% across list, sold, and auction for a lot of these high horsepower tractors. So again, just put wraps on that, one of the more concerning categories that I'm following. Self-propelled sprayers, planters, and then we'll wrap it up with a little bit of forage equipment. Self-propelled sprayers dropped in supply 28% year over year. That's a good amount of drop, and really these have been a resilient item. When I look at the elasticity factors again, self-propelled sprayers don't necessarily fall into that because of the tech and the value that they're providing right now, from spraying fungicide on corn late in the season, and we're having more and more acres planted in corn, that it's bolstering the use of these. The technology is getting better, and so there's a lot of positive boosts really for the self-propelled sprayer market. Auction, we've seen that drop just slightly year over year, but the biggest reason why you see that auction drop year over year is because the older generation of John Deere sprayers is being pushed off of the market as the new generation comes on the market. Call it the smarter generation that's more of a see and spray capable sprayer. And again, we see it exactly when we look at this newer generation, these 412R, the 408R, 410R, that those that are sold at those low R mark are bringing a price premium. So in summary, in the self-propelled sprayers, new gen and tech just pushing demand even higher, and those older gens are presenting an opportunity now in the resale market for some farmers to invest in those that haven't previously been able to because of their cost structure. Planters. Planters are a bear to value, but the supply really matters for what's out there, and the supply has been dropping significantly year over year, 37%. It's actually 50% off of the high that we saw back in 24. What that has done is it's created a deficit of planters out in the market. And for those dealers that were very proactive in their regions of reducing inventory in the past, they're actually seeing an uptick. And we can see that in our data here, that little tick up of a blue there that have that 22%. That represents trade-ins that are 0 to 30 days old. We haven't seen an uptick like that in a couple of years. And talking with dealers, they had some of the better early ordering periods in May than they've had in a while, all indicating planters have strength. Now, resale values on planters are challenging, especially if there's upgrade kits that have been added later. It is tough to find a person that likes the planter the way that you like a planter, but some relative strength in this market. And we're also watching this age category here at the bottom continue to decrease. That's healthy too. From a valuation piece, again, planters are all over the board. This is for 24-row planters, relatively late model. You can see that auction kind of wavers, but steadily left to right. Now, really strong auction values here in Q2, retail values up at the top in Q2 were sold, actually beat out the average list. That's rare that happens. It's just those premium planters. When people want them, they'll want the premium pieces that are on the lot. Okay, for planter summary, for a lot of dealers, this is returning to their profitability. That deprived supply is building up demand right now, and the age inventory is improving. A lot of positive things going on for the planter market. And finally, with round balers, just to put a pin in the equipment, supply continues to drop, makes the market a little more healthy, but honestly, that supply is dropping because the manufacturers have really curtailed a lot of the new orders that they're putting out there. When we look at the aged inventory of balers, it acts a little different, where there's always this subset of balers that are just always sitting on a dealer lot. And for whatever reason, maybe they demo them, maybe they rent them out, but it just always sits there, and they tend not to move. When you take that out of the equation, you do see the inventory dropping over time, but there's just not as many uses for a baler right now, with the cattle herd being smaller and the acres being baled significantly smaller than what it was 3-4 years ago. Looking into the future, I'm focusing a little bit more on tech here. This is actually an old combine. That's my dad standing on the combine. And this is the Kuhn Karl over in Europe, completely automated. I think there's a lot of things that we have to look forward to in the ag industry as it continues to innovate. What I want to do in these next few slides is talk about what might change in the near-term future within farming, or I should say not farming in this case especially, ag equipment and equipment sales, new home construction, and the housing bill that maybe is going to get passed. It did pass, I believe, the House and the Senate. Still has to be signed by the president. It should alleviate some living expenses for farmers, yes, but more impactful to the equipment industry is housing starts and housing completions, which will bolster the compact equipment market and the compact tractor market for those residential homes. Again, from our friends at Meridian Ag Advisors, they do a great summary of everything that affects different row crops that are out there and the different livestock industries and the effect that the Iran conflict and the Iran war has had on those. Obviously, and this is probably, again, no surprise to anybody on this podcast, the nitrogen for the corn and the wheat, very significant there. We're also seeing the increased cost of diesel change people's buying patterns in terms of implements and those higher horsepower tractors, which put those further at risk. But we're seeing a movement slightly more towards the no-till, the strip-till, where you have less passes on the field. And that's encouraging those practices and discouraging things like sales of tillage. And then finally, a couple things that we see going on across the world that could have a prolonged impact on equipment valuations. Starting from the top, I know that the Russia-Ukraine war has escalated here recently, and Russia is punched back with bombing the ports at Odessa. That could slow the exports of wheat and corn, could maybe bolster the markets. France and Europe is having a heat wave. That's certainly having a negative impact on their crop, even though they don't export much. They will probably have to import now. Brazil is going to be in a world of hurt if they cannot get fertilizer in for their safrinha crop. We're going to be watching that, and that tipping point is really happening right now. So those shipments will have to start coming in order to make it up the river and to the points that they need to climb at the time they need to climb for that safrinha corn. And then a little bit later news, but Australia and the challenges that they've had with their wheat crop is supportive slightly to the wheat market, but the wheat market needs support. Okay, so I covered that. Didn't quite make the 30 minutes, probably about 35 minutes. Anyways, I hope you enjoyed this. If you have any kind of questions, again, this is a QR code for our Facebook. Sorry, no, not Facebook, professional Facebook, LinkedIn page. Connect with us there, follow it. You'll get just leaked out the information. As it comes available, I'll do weekly updates on the equipment market and sometimes have guests that are in the industry too, as well as all of our blog posts. Hopefully that's helpful. And a quick summary, I'm going to leave this with you again if you didn't capture it earlier, just to summarize what we're seeing in the market and in terms of potential risk that's out there. We hope this visual and this whole webinar is helpful for you. This is my email, another way that you can get in touch with me. Feel free to email me anytime, and whether it's myself or a team member here at TrackZoom, would love to help you out with something. Thank you for joining me. Take care and have a good day.